everybody. This is Shingi, the CEO of Asoba. And today I want to talk about, we're just going to do a little bit of a Q&A around real-time energy trading. So to start with, just kind of high-level definition, what is real-time energy trading? So at a very high level, real-time energy trading involves buying and selling of electricity on more of a continuous or real-time basis. And this allows market participants to trade energy based on the current supply and demand conditions. And so this type of trading will allow us to balance the grid by adjusting the energy flows instantly to meet different fluctuations in both demand as well as supply. So how does real-time energy trading work? So it works through the advanced market platforms and technologies that allow for automated trading. And so it relies on things, IoT things, Internet of Things like smart meters as well as sensors that provide real-time data on energy usage. And there are also algorithms that are in the background that will take this data and will facilitate instantaneous trades. It'll do things like forecasting as well as generating the actual dispatch decisions. Again, this is all on an automated basis. And so with these systems, we're able to dynamically adjust prices based on the real-time supply and demand conditions. So the technologies that support real-time trading include smart meters, and smart meters essentially provide real-time data on energy consumption. So this is how we get very accurate data on the load. Then we use that data to then forecast future expected load. Next are automated trading systems. So these are systems that use algorithms to execute trade based on real-time data. Blockchain is often involved, and this ensures secure and transparent transactions. The implementation of smart contracts is also a really critical piece of being able to automate this kind of system, while at the same time enabling financial controllers to actually have a clear line of sight and traceability in terms of where each dollar is being spent and generated within the system. And then lastly, we also involve advanced metering infrastructure. And so again, these are components that will collect and communicate data in real time. So what are the benefits of real-time energy trading, especially when you compare it to the current state? Now, the benefits include things like increased efficiency. So the ability to optimize the balance between supply and demand is something that's going to be incredibly critical as grids transition from more centralized grid structures where you have these centralized power plants that are basically dispatching in a unidirectional way to all of your end customers. And we're transitioning to a system now where you have prosumers. So you have people that have solar or other renewable generation on site, and they act as generators or decentralized generators as well. So being able to leverage these systems to be able to then connect these prosumers in a way that enables and supports continued balance of electrons on the grid becomes incredibly critical. Another benefit includes cost savings. And so this allows consumers to do things like take advantage of lower prices during off-peak periods. And so people are able to make financially optimal decisions based on their own individual needs and setup. Then a third is enhancing grid stability. And so, as I kind of mentioned before, the leverage of these algorithms and getting this real-time data allows for more effective maintenance of stability in the actual energy supply at any given time. And then lastly, there's also the environmental impact. Because this allows for the integration of distributed energy resources, this helps facilitate, again, the integration of renewable energy and reduces the reliance on fossil fuels. Now, this is not a thing that's going to happen overnight. Fossil fuels still will remain a critical piece of energy portfolios across the board, but the ability to start integrating some of these renewable energy resources gives us a critical first step. And in places like South Africa, where you have 86% of the grid run on coal, right? The ability and the mass proliferation of solar allows us a really critical opportunity to take a lot of that consumption of coal off of the grid. So this is not all perfect goodness that comes in. There are also challenges that do come from implementing these types of real-time energy trading systems. And a big one is market volatility, particularly at the beginning. As you first implement a dynamic real-time trading system, you will experience a degree of volatility as price discovery happens in real time, essentially. But over time, that volatility is expected to diminish as you start to get greater stability in terms of the number of off-takers, as well as number of exporters that come onto the grid. You start establishing clear policies that govern how much somebody can export at any given time, et cetera. Another significant challenge are the infrastructure costs. And so what this means is that the implementation of distributed energy resources comes with some CapEx investment upfront. So the implementation of the metering, the controlling, all of that supportive infrastructure for data transmission, data extraction from the actual generation and from and sort of capturing the usage from off-takers. It does require a significant amount of CapEx and time to actually deploy and implement that. And again, when you look at it from a South African context, we're talking about millions of smart meters that need to be deployed in order to support these kinds of systems. So, and again, it's a pretty substantial, we're talking about in the billions of dollars USD type of investment. And this is just one country. So you can imagine when we talk about implementing these kinds of things at continental scales. Next, you also have regulatory hurdles. So in most countries, it's relatively challenging to wheel power from one private source to another. Now, there are some countries, like South Africa again, that are on the path to deregulation and to supporting privatization of generation. You have countries like India, like Malaysia, that are doing very similar things. And you're seeing, again, a pretty significant, once you see that deregulation, you see a pretty significant portion of regulation switch and transition to private. And you also see over time a stabilization of prices. And lastly, the last big challenge that these types of systems create or generate is cybersecurity challenges. And so protecting trading systems from cyber threats. Who participates in energy trading? So the key stakeholders of energy trading systems include producers. So these are people that are generating electricity. So this could be a generation company, could be a municipality, it could be a large-scale IPP, it could be somebody that has solar on their roof at home. Additionally, you have consumers, and so these are residential, commercial, or industrial energy buyers. You have brokers and aggregators, so these are the private market players that are working with a number of these generators, aggregating that power, and then brokering sales to municipalities, to national utility, or to other large-scale energy buyers. And then lastly, you have grid operators. So you have the national utilities, you have the municipalities who actually essentially control the actual operations of the grid. So the future of real-time energy trading, I believe, involves a greater level of integration with renewable energy resources, certainly more sophisticated artificial intelligence and machine learning algorithms for the predictive analytics, for the forecasting, for the dispatch optimization, as well as the broader adoption of blockchain for secure transactions. And again, this is not just about, or even at all about, the cryptocurrency side of things. It's actually more about the ability to trace financial transactions and the ability to implement smart contracts to automate the execution of contracted relationships or contracted deals or trades. And again, all of these things, if you're able to decouple it from a human being making these decisions, it allows for a greater level of automation, which will then lead us to the path of real-time dynamic pricing for this energy trading. But I think the other key piece to this, in addition to the technology piece, is also expanding market participation. And so you do this through a couple of different ways. And we mentioned the development of infrastructure, so the smart meters, the distributed energy resources that are built, et cetera. But then we also have to find a way to ensure that this is a just energy transition. So this is not just something that people who can afford to put roofs or solar on their rooftops can participate in, but this is a system that either enables or empowers people who have lower income to also generate their own power, or to be able to have access to clean energy at a cheaper price point.